Hello everybody, welcome back. Let's have a look at Bitcoin, shall we? We're just going to focus on Bitcoin, and I suppose what I'm going to talk about is the range within a range. All right, so this is what's going on, in my opinion. So we've been speaking about the possible reaccumulation range, which is likely to play out for about 2 to 3 months or so, and the vast majority of the price action I expect would be between about 33,000 and 42,000. This is the inside range, is what I'm going to call it. Then we have an outside range I've marked off with a green, and the lower end of that with a red. Yeah, green for we break above there, we're good to go, and red for oh god, if we break down here, it's likely to become a bear market. And I'm not just talking about wicks below. We can have wicks below there, that's no problem. It's closures below and then turning this to a matter of resistance, just as this would be exciting to see wicks above it. It's only really counted, I'd say, if we see retests of it and then a bounce, you know. But what we're thinking about here is the range within a range. So so far, the first area of the range and the main area of this range is what's being played. That's 33,000 to about 41,000. There's also the top of the Bollinger Band at the top here, and also the 200 exponential moving average, which is also coming all at the same area. We've got two other moving averages. We've got the 50 exponential here, about 42, and the 50 simple moving average, about 43,000. So 43,500. The way that the chart is being set up right now, I'm inclined to think that what we'll do is we'll break above this and test these areas, maybe even in a dramatic move up, right? That could even be based upon some kind of news. You know how these things work. But the chart is able to, in my opinion, to break out of here, even if it's just a temporary move, and then probably get rejected from this. I don't think we're looking to come up here straight away. But I think this area will get tested, as will this area, but the vast majority of the price action is going to play within this 33 to 41 or 42,000 range for, like I say, a couple of months, a couple more months that would be. So we're thinking about August, really. Some point in August for this to be resolved, whether that to be the up or to the down. Now, we've got this death cross that's coming in, and this is something we were talking about on the live stream last night, and how a lot of people are stacking up shorts prematurely in anticipation for a death cross, which, you know, in some people's books means that it's going to die, Bitcoin's going to die. And they look back in history and go, wow, wouldn't it have been great to shot the parabolic top in 2017? Wouldn't that have been great? Wouldn't that have been amazing? Well, it would have been pretty good, yeah, definitely. But you know, things are never that easy and never that simple. In hindsight, everything is 2020. What we want to look at now is how periods of consolidation have then continued after a death cross and what it actually means. Now, this is something we were looking at yesterday. It's a pretty impressive way to manage your, I suppose, getting into any kind of strong position, especially a short, you know, using derivatives and leverage. Jeez. So we'd already been consolidating from this parabolic top. This is 2019, so this isn't one, you know, this isn't a bubble pop. This is people getting overexcited with the use of derivatives anyway, leading the bull market into a very early bull run, which peaked around here and then consolidated for a long period of time, to the tune of 47% over a couple of months. Now, people were looking at this. I remember this. People were looking at this going, oh god, oh my god, look, death cross incoming. You know what this means? This means that there is way more pain to be had. We are going to stack some shorts. Epic. And yeah, fair enough. There was opportunity here to stack shorts, I suppose, to an extent. You know, breaking down below the 200 exponential, coming up to get rejected from it. That's an area to short from. But anticipating this, which would have taken a couple more days, people get too excited, way too excited. The shorts were stacked high, like a big block of Jenga, and what happened? The most epic annihilation of those shorts altogether. 41% move in a couple of days, in a 24-hour period. 40% move, destruction. Look, a death cross isn't a death cross until it crosses, and even when it does cross, let's have a look at this. So we had a death cross here. Where was the price action on the day of that cross? Okay, if we're going to be generous, we'll measure it on this candle. From the wick, just to be generous, from the bottom to that wick, 17% moved down as a result of the death cross. If you're being generous, from the top to the absolute bottom. You would argue that the majority of this downtrend had already played out by the time we got this. Now, this cannot be accounted for. This was a shock to the system with the March crash. Everything felt that. But what I'm trying to point out is that, first of all, we've got 2 lessons to learn just in this little piece of price action. First of all, don't anticipate a giant move down just because you think a death cross is going to happen. When things look so inevitable, and people are stacking shorts up, yeah, it's a gamble. It's a gamble. There are some big players out there that will manipulate this market, even if it's just on the small term time frames, to destroy your positions. When things are so obvious, and people all expect a death cross to suddenly, end the world or something, it's very likely going to get hurt, I'm afraid. If there were to be a position to take, which I'm not, like I say, a big fan of derivatives, but if there were to be a position, it would be shorting on the way up. If we were to get up to maybe the 50 simple moving average, about 43,000 or so, and see where we go from there. I have an outside range all the way up at 49,000. These are the areas to short from. But just because we expect and probably will receive a death cross over the coming weeks, over the next week, I would expect a week from today we should have one, but doesn't mean that because it looks like it's going to happen doesn't mean it can't. Remember what I've just shown you. I still expect the vast majority of these next 2 months ahead of us, all the way up until August, into August as well, we're going to play out this boring range, the inside range and the outside range. And this is going to frustrate everybody, and it's going to lead crypto Twitter to have wars amongst themselves, just as they already are doing on my Telegram chat, but mostly I suppose on my YouTube channel. You get some people going, "You are an idiot. Do you not realise it's going to $10,000? And I'll be like, well, no, I didn't realise that, no. Do I think it's going to go down there? Not really. Could it go down there? Maybe. But based upon everything we see right now, can anyone make that call? Nah, no, they can't. And then they've got some people going, well, actually, we're going to go to the moon. You just wait and see. In fact, I'm thinking it's going to have a new all-time high by the end of this month. Right? Really? Really? Based on what? Based on this chart? I don't think so. Honestly, I think we're going to play the inside range for the vast majority of these 2 months, and then the outside ranges will both be touched. And then I expect it to probably break out and make new all-time highs by the end of this year. But for the next couple of months, same as always, boring. So I just wanted to show you we've got an inside range and an outside range, an incoming death cross, which, like I say, could get hunted out. Plus, when it does play out, it will expect some pain, but don't expect the end of the world. That's my interpretation of it anyway. I'm going to leave it with you there. But thank you for watching. Hope you have a nice day. Take it easy.